one fund, on point for today, the expert to talk about it. Welcome to the ETF of the Week. Yes, it's the ETF of the Week, where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with Todd Rosenbluth, the head of research at VettaFi. And at VettaFi.com, you'll find all the tools and research that you need to be a savvier, smarter investor in exchange-traded funds. Todd Rosenbluth, great to chat with you again.
It's my pleasure, Chuck. Good to be with you.
Your ETF of the Week is
the abrdn Bloomberg All Commodity Strategy K-1 Free ETF. Ticker is BCI.
BCI. That's a ticker symbol for a mouthful. The Aberdeen, or abrdn, the abrdn Bloomberg All Commodity Strategy K-1 Free ETF. Now, commodities right now, Todd, I won't say they're all the rage, but I'm hearing a lot about them, that's for sure. So is this first a commodity play, and then we need to dig into the bells and whistles that made you pick this over other commodity funds?
Yes, this is a commodity opportunity for investors and advisors. We at VettaFi recently held a webcast, and what we heard was that advisors were interested in increasing their exposure to commodities. This is an ETF that's well diversified. It benefits from the rising prices that we've seen for gold and energy and copper, because this holds exposure to a number of different commodities, and you get the benefits of diversification. And as we'll dig into some of what's inside the fund, we like that at VettaFi.
That said, K-1 free, that's about taxation, and what you're going to wind up getting, that's just trying to avoid some pain, like paperwork pain, right? It's not really that that's going to change the way this fund invests, is it?
No, you're correct. So taxes can become a challenge when you're investing in certain commodity ETFs. We've seen an evolution in the ETF industry where more products have come out that are K-1 free. I want to get into the weeds on this. This just will give you a traditional ETF experience despite investing in commodities, and that should be a benefit to all investors.
When people look at a commodities fund, there are some commodities funds that are focused on the obvious. They're focused on gold and precious metals, which, oh, by the way, you can get in other funds or you can specialize in. And then there are some that are, gravitating towards everything. When you're looking at this as a commodity play, I mean, how diversified is it? And is it giving you exposure to everything you want and need?
So we think you're getting the benefits of diversification. It's exposed to energy, oil prices and natural gas. It's exposed to precious metals, not just gold. You get exposure to the various agricultural products that there are commodity futures tied to, and some others that I'm failing to remember in specifics. You get broad diversification with BCI, and that's beneficial. Yes, we've seen strong prices for gold. Gold has actually outperformed some of the agricultural commodities. I'm not smart enough to tell you which one is going to perform the best between now and the end of the year. If you're looking for a core position to have a slice of your portfolio, this is a great product to be able to do that. And the team at Aberdeen has a long history of offering commodity products, so we think they're a good partner to consider.
Commodities historically volatile. Now, you and I have talked in the past that you are not a trend follower. You are not somebody that says, hey, stick it on a 200-day moving average, though you like it if folks want to do that sort of thing. But that means that if I'm not going to wind up saying, hey, I've got an exit point or something if this gets hairy, I certainly want to control how much of a portfolio I want it to be. So how does this play with the other things in a portfolio? What am I doing to make sure I'm getting the most out of it? Like, how much of a portfolio you're letting this be? And do you add this if you've already got, gold and precious metals and the rest all hanging around?
So we find that most investors have something close to a 60% equity, 40% fixed income with their exposure to get broad diversification. We think commodities can fit in a low single-digit percentage to provide some diversification. We certainly saw it a couple of years ago. The stock market and the bond market were both down in value, and commodities were a safe haven. They benefited during inflationary times and given the uncertainty geopolitically as well as from a financial monetary policy standpoint. This year, we've seen commodities do well, even though the equity market has done quite strong as well. I think you could get, you've been getting high single-digit percentage returns, if not more, from various commodity ETFs. Here, you're getting the benefits of broad commodity diversification with this abrdn product, BCI. So gold might do better than agriculture, or might do better than energy in certain time periods, or it might fall out of favor. You can spread that risk around and not have the same level of volatility with a more broadly diversified commodity ETF. And this is tracking an index. So you're not making calls on individual commodities or tapping into someone who's doing that. You're getting broad market exposure. Think of this as a version of the S&P 500, but through commodities and abrdn managing.
Yeah, and that's important because commodities are an area where if you wanted to go active, if you want somebody to go, oh, now we want to be in precious metals, next we want to be in corn, okay, that's a strategy worth following potentially, but it's very different from this strategy. And is there for you an upper limit to what this would be in somebody's portfolio? Because this is kind of your introductory, go get an exposure to commodities kind of thing. If you don't have one, and a lot of people don't, this might be the way to do it. But do you make this 5%? Could this be, and I recognize you can't make it specific, but to you, is there a spot where you go, not more than X?
So I think this is a small slice of the portfolio. I think I could see 5% making sense for investors. And you asked the question earlier, what if you already own a gold ETF like GLD or some of the other products that are out there? This can complement that because there are certain time periods when energy or agricultural commodities are going to do better than gold. So you probably want to have a single-digit percentage at most exposure to commodities and focus as much on equity and fixed income. But diversification matters, asset allocation matters. It's hard to know which ones are going to do best. And through a product like BCI, you can get that. And we're going to talk more and more about commodity ETFs. I think we're going to have this come out on Thursday, which is when we're going to have a alternative symposium at VettaFi. Folks can go to etftrends.com and hear from the abrdn team directly.
Yes. This ETF of the week is out on May the 30th. Look for that on VettaFi.com. Again, it's the BCI, the abrdn Bloomberg All Commodity Strategy K-1 free ETF. The ETF of the week from Todd Rosenbluth at VettaFi. Todd, talk to you next week.
See you next week, Chuck.
The ETF of the week is a joint production of VettaFi and MoneyLife with Chuck Jaffe. And yeah, I am Chuck Jaffe, and I'd love it if you check out my hour-long weekday podcast by going to MoneyLifeShow.com or by searching wherever you find your favorite podcasts. Now, if you're searching for better information on exchange-traded funds, make sure you check out VettaFi.com because they've got everything you need to be a better investor using ETFs. They're on Twitter or X at Vetta_Fi, and Todd Rosenbluth, their head of research, my guest, well, he's on Twitter too. He is at Todd Rosenbluth and worth following. The ETF of the week is here for you every Thursday. We hope you'll follow along so you don't miss one. And we'll be back next week. But until then, happy investing, everybody.